Welcome back, everybody, and it is, yes, another absolutely stunning and beautiful day out there. So the question is, are interest rates going to blow up the real estate market? Really, the interest rates are blowing up the internet. And we had, as we told you last week, Wednesday was going to be a really important day. And guess what? It ended up being not only a really important day, it fit into one of the 9 catastrophic events for mortgage interest rates in the last decade. All right, so let's get the show on the road. Let's talk a little bit about what the heck happened, what's going to go on, how best can you navigate this. Now, when we pop up our chart here, basically the housing newsletter, if this is something you guys want, just let me know. Just, ping me down below. The biggest thing, rates were rocked by the inflation data, and that could not be truer from the fact that when we take a look at, in fact, I got to show you this. This is an amazing chart. Look at this. So when we talked about 9 out of the 10 worst days in more than a decade, Wednesday was one of them, and that's, of course, that little circle on the right. Not as catastrophic as it was back in 2020 when things spiked up. And why was this? This is a very simple thing. The CPI numbers, or the Core Consumer Price Index, actually came out. It just was not good. In fact, it was far from good. And because remember, the feds don't control mortgage rates; those are controlled by the stock market. The market absolutely just went bonkers, and by doing so, mortgage rates went way up. We saw a lot of issue with a lot of the trading and a lot of the mortgage-backed securities that are falling back on that. And in fact, because these numbers were so bad, some folks were saying that maybe the feds were actually going to, we're going to raise rates. No, I think this is going to be a temporary thing. I think we're going to hopefully start seeing some numbers coming down. Not saying 100% that they will, but I think they're going to be more trending in a more calmer path that's going to keep the feds from doing whatever they're going to do. Are they still going to reduce rates? Not for a while. When? June at the earliest, maybe. But again, remember, those are just not mortgage loans, but commercial mortgages. What banks lend to each other every day, your credit card rates, your HELOCs, home equity line of credit, and of course, car payments. All right, moving on. So when we take a look at the headlines are super, super funny this time. Well, I don't know about funny, but anyway, mortgage rates are actually the highest since mid-November. A true statement there. And as you can see on the top right, we have rates actually bumped up to about 7.3. They came back down a little bit shortly thereafter. Basically, the worst day since October of 2022 was one of the other headlines. And most importantly, hey guys, look, there's a video. We will post it down below. 5 questions you need to ask when getting quoted mortgage rates. Look, it's super critical. Make sure you're understanding what you're looking at, especially if you're getting some really good rates. We saw somebody out offering 6.5%. Okay, but understand that took almost 2%, 2 points to get there. That's $20,000 on $1 million house. I'm just saying, that's just the cost of the loan. That doesn't include everything else. Does that make sense? Well, most likely, no. But there are different options to take a look at. Make sure you watch that video so that, you can get super, super smart. When we blow up Freddie, when we take a look at Freddie Mac and what they have to offer, remember, this is a 7-day running average. It's a little bit of a lag. With that, you can see that they're at 6.88%. That is next week during our show. You're going to see that those numbers bump up. And of course, on the right, you can actually see how they took a pretty significant jump, all things considered. Now, remember, interest rates are controlled by the stock market. And by doing so, they go up and down. Next week, we could see them absolutely come back down again as people acclimate and as things kind of normalize. Yes, they do react. They don't respond. They react to the market. And that is what we definitely saw on Wednesday. There was a lot of folks that were having a little bit of a heart attack. And that is super important to understand. When we take a look at the Northwest MLS, Now let's get back down to what's going on. What are the buyers and sellers doing in the market today? Well, funny enough, when we take a look at this, we can actually see, in fact, let's just go ahead and zoom in on that. Look, we had 1,161 homes come on market. However, we had 1,415. In fact, that went pending, and of course, 800 sold. In fact, to get to my in fact, 145 homes went pending just in the last 24 hours. And we only had 44 homes coming on. So we're still seeing our decline on inventory, right? So when we pop over and make sure you're subscribing, make sure you like. Hey, if you like the information and it helps you, make sure you like the video. Subscribe and share it if you wouldn't mind. All right, let's take a look a little bit deeper. When we take a look at what's active on market, okay, and versus what has sold. So we watch those two graphs because they help us with trend. And now take a look at this. So when we blow this one up, and let's make that a little bit bigger for you guys. All right. Look, when we take it to year to date, we're 10.1% in price higher than where we were at last year. So year to date, the average price is $817,000. However, for the month of April on the right-hand side, we're already at $869,000 or 14.5% higher just for the month of April. Our sold or our active price, that's the top line. Look, we're about 5.5% less than where we were at. Not an unexpected trend. And then again, the same thing for the month of April. So when we take a look at those two numbers in and of themselves, super important because it helps us to understand trend. What are people thinking? Where are they going? Because when we actually start moving forward, excuse me, as we start moving forward with what is going to be the direction of buyers, we can still see that the buyer motivation is there. Our inventory is still low. I'm not saying we have a massive shortage. We're only at about 1.8 months of inventory when they say 4 to 6 months, but we haven't had 4 to 6 months since 2013. So when we talk about, is this the new normal? Entirely possible that 2 to 3 months of inventory will become our new norm. We are sub that, and we are seeing multiple offers, escalations, and whatnot with homes. Now, when we take a look at on the bigger scale of pricing and volume and what we call velocity, listen, sales are actually down 3.2% year over year, which is only 438 homes. Super, super small. In fact, let me make that a little bit bigger. All right, 438 homes. That's super, like, that it doesn't even matter. It's such a small number comparatively where we were at last year. Our inventory is up 3.2, but our pending sales are up 1.1%. When we take a look at it month over month for the same month of April, I should say year over year, the same month of April, look, our inventory is up 55.8%. 55.8. We're only 12% year over year. Why is that important? Again, that shows you that we're still seeing massive movement in the market. We are seeing more pending as we continue through the year, even what we saw numbers last year. In fact, last year and this year are very similar. Except for I have a sneaking hunch this year is going to be a little bit more aggressive yet again. All right, new construction, super cool. New construction, when we talk about what they're doing and what that involvement is, new construction is still propping up a lot of our inventory because it makes up about, well, let's blow this up here for you. It's making up 21% of our market. Let me make that a little bit bigger. There we go. All right, makes up 21% of our market when it's normally new construction over existing construction is normally only 11%. Now, super interesting, new construction is also 10% less than where it was just at the beginning of the year, where we were closer to 30%, which was really high. We're getting this back down a little bit more situation normal. Numbers are still moving well. We're going to see, in fact, we saw four builders offering incentives with mortgage rates in the 5s with some pretty significant buy downs. If you want to know what homes that qualifies for, link us below, and we'll send you the list depending on the area that you're in. Let's move on. Let's talk about bank owned. All right, bank owned. Oh my gosh, people. The wall of shame. The wall of shame this week is, well, it's excuse me, it's super ugly. It is almost catastrophic when you consider the lack of attention to detail that some of these agents have. And you might be saying, George, what are you talking about? Let me blow this up here. Look at this. There's shows to be 61 homes throughout the Northwest MLS, okay? 15 of them, and I actually stopped after 15. After 15 of these homes, right, those are owner-occupied. That means that the agents actually are publishing an owner-occupied home as a bank-owned home. And some of them are in the millions, okay? And in areas where $1 million means something, and I just shake my head. That's shameful. But anyway, the numbers here, our inventory is significantly less when we take off the 15, and actually I think there's more. When we talk about what is bank owned and what is not, what has been, transitioning dependent, those numbers are skewed heavily because of these mistakes. I would have to go in and fully vet all of those. But for consistency of our metrics, I'm leaving it there, and I'm just telling you about that. All right. So when we take a look at the end of the day, where is our market going? What are we doing? Our market is doing incredibly well. All right. And the thing to really keep in mind is that as you're out there looking at mortgages, as you're out there pondering, what should I do? One, stay in tune with this channel, and then look at that video. 5 questions you should be asked when getting quoted mortgage rates. Super, super important. Okay, there's no selling there. Pay attention. Make sure you're looking at those, because you can start spending thousands of dollars now and over time, which could be tens of thousands of dollars on just making a simple mistake on not understanding rate. In the meantime, if you guys have any questions, make sure you reach down below. We love, love, love questions. And smash that subscribe button. Have a beautiful day. It's absolutely stunning outside. In the meantime, I'll see you guys on the next video. Take care.